Hi, this is Phil Yaeger of Yaeger CPA Review. We had a technical problem, so if there was another one of these videos on for today, Wednesday, it's just because it just went out. We're dealing with computers, and we can have technical problems with computers. And today is the day that I have my blue shirt on and my blue frames. I like to be color coordinated. And today's topic is going to be flow-through entities in taxation. Now, do you know what the two flow-through entities are in taxation? They are the partnership tax return, the Form 1065, and also the Form 1120S for S corporations. Those are the two flow-through entities because partnership returns do not actually pay taxes. In fact, any taxable income flows through the return, ends up on the individual partner's 1040. Now, an S corporation return, generally doesn't pay taxes, but it can pay taxes on two things. It can pay taxes on excess passive income, and also if you have any built-in gain. Now, built-in gain occurs when you convert from a C Corp to an S Corp, and if you actually have any appreciated assets that transfer from the C to the S Corp, they may be subject to a built-in gains tax. So the S Corp could pay some taxes on excess passive income and also built-in gains. But generally, it's a flow-through entity. Now, what do you have to know on the exam? Well, you should know when it comes to the partnership return, you should know how to calculate the first thing on the page, Form 1065. Got all excited about that. All right, and that's ordinary income or loss. And then you have to know what items come over to the individual partner schedule K1, which that's the flow-through schedule, all right? They're flow-through entities, all right? Make sure you know what items comprise ordinary income, the other types of income that are reported on the return but not taxed to the partnership are portfolio income, which is interest, dividends, royalties, capital gains, and also passive income, which is the what? Net rental income. And if you look at an S corporation return, which is nothing more than a corporation that wants to be taxed like a partnership, you will notice that the computation is very similar. You have to calculate ordinary income, and then you have to know what items come over to the K1 of each shareholder. Now, there's a major difference between the ordinary income on a partnership return and an S corporation return. The major difference is that the ordinary income on a partnership return is generally self-employment income, where the ordinary income on an S corporation return is not subject to self-employment tax because it's corporate income. But remember, the corporation doesn't pay tax on that ordinary income in an S Corp because an S Corp is a flow-through entity. So make sure you're familiar with that. Now, because they're asking higher learning type questions, they might ask you, for example, if a client came into your office, all right, what should you be? Should you be a partnership? Should you file an S corporation return? Or if you're a corporation, you can file a C corporation return. Well, if I had an entity that came into my office and they were a corporation, I would ask them this, all right, do you think for the first few years you're going to have losses? And if they say yes, I would say to them, well, if you're going to have losses, you want to get the benefit of those losses on your individual return. So what you want to do is file as an S corporation, all right, because now the ordinary losses on the S corporation flow through and they're deductible on the individual stockholder's return. But remember, that shareholder, to deduct those ordinary losses, has to have basis in the corporation. Now, if that person didn't file an S corporation return and they filed a C Corp, right, what would happen is the C Corp, 1120, they'd come down and calculate taxable loss. Now, would that taxable loss end up as a deduction on their individual return? Absolutely not. That probably is a net operating loss. Well, the best you could do with that taxable loss is treated as a net operating loss, carried back 2 years, forward 20. So, you want, this is the type of thing they could ask you on the exam, all right? All right, they could ask you, for example, it has nothing to do with flow through entities, all right? We have an entity that comes in and says, should we file as an LLC or an LLP, all right? Now, in another video, I'm going to talk about, all right, the differences between LLCs and LLPs from the standpoint of taxes. Now remember, an LLP, all right, legally is a partnership, but the LLP is how the partnership reports itself. That's what it means. That's what these LLC designations. It's how they report themselves, all right? But an LLP is still a partnership. An LLC is generally a corporation, but from a legal standpoint, it files in that state maybe as an LLC because there's certain benefits, all right? Just like if you have a group of doctors. If I had a group of doctors who are partners, all right, how would I file? Well, first of all, I would want to file from a legal standpoint as a limited liability partner, LLP. Why? Well, generally in a general partnership, if they're not an LLP, each partner has unlimited liability for all the debts. In fact, they also have unlimited liability if their partners commit any type of negligence, especially if they're doctors. So what do they now do? All right, the doctors form an LLP, which means that, all right, they are not personally liable for the debts of that partnership now. And also, all right, they are not personally liable if their fellow partners commit negligence, like malpractice, that type of thing. However, in an LLP, you must have one partner that has unlimited liability. So one partner must be designated as having unlimited liability. But this is not flow through entities, but I'm going to have a discussion because once again, this is higher learning. They want you to say, hey, here's a set of facts. You determine how they should file. That's why I'm going to start talking more about these LLCs, LLPs in another video. But right now, we spoke about the flow through entities, namely who? The partnership tax return and what? The S corporation return. All right, make sure you know how to calculate the items on those returns. And if you know that, and by the way, follow the blueprints, which are the maps, and you won't have any problem. The blueprints state exactly what they want you to know about flow through entities. Take care. And by the way, if you have a suggestion, what you would like me to go over, all right, please send me that. Make a comment on our Facebook, and I will actually go over something that but no one's actually made comments. I hope you got something out of this. I realize the exam can be difficult, but if you study, you can pass this exam. You really can. And I honestly believe, this is my opinion, all right, that the exam is curved, in spite of what the AICPA may say. It's curved. So do you really have to get 75% right? Probably not, all right? So don't worry. Once you go into that exam and take it, what you have to do is you do the best you can. Answer as many questions as you can, and you have to hope that you answered enough questions to be comparable to a 75. Not getting 75% right, but comparable to what they would consider 75% passing grade. Just know that. Don't panic. This is the whole thing. When you go into the exam, look at it this way. Here's all these questions, all right? What's your job? Answer as many as you can within the time limit. Try to answer as many as you can. You don't have to answer all of them, all right? And you don't have to get all of them right. You just have to get the score that will become equivalent to a 75 or higher. That's a good tip. I don't want you to panic and worry about passing this exam, because even though you come out and you are completely panicked and you're always convinced you failed, all right, just remember, you have not an idea or a clue until you get your grade, whether you passed or not. Okay? Take care, everyone. Thank you for your time. And I always enjoy giving these Facebook videos. All right? I really care about you as a student, and I want you to pass. Take care. Have a good day.